Kaspa just crashed over 50% in 60 days. But while retail panics and sells, whales are doing something completely different. One wallet just added 7.5 million Kas today. Another moved 15 million around internally. And Gate.io, they just saw a 15 million KAS outflow straight off the exchange. So either these whales know something we don't, or they're about to learn a very expensive lesson. Let's figure out which one it is. What's up, crypto fam? Welcome back to the channel. If you're new here, I break down the charts, the whales, and the market moves so you don't have to. Hit that like button right now, smash subscribe, and turn on notifications because this Kaspa situation is getting spicy and you don't want to miss what happens next. Kaspa enters this week bruised, battered, and down bad. We're talking a 50% haircut over the last 2 months, while Bitcoin and the rest of the market have been doing their own version of musical chairs. But here's the twist. While the price is bleeding, the fundamentals are actually improving. Kaspa just processed 158 million transactions in a single day, a record. The network scaled to nearly 450 active nodes. They launched Kasia, a decentralized messaging app now live on Google Play, and they celebrated their 4th anniversary, proving this isn't some fly-by-night project. So why the disconnect? Why is the price acting like it got dumped at prom while the tech is out here setting records? That's the million-dollar question. Or in this case, now here's where it gets interesting. According to Kaspa Daily on X, sentiment is still bullish. In fact, KAS ranked number 2 in overall bullish sentiment today. The community is treating every dip like it's background noise at a rock concert. Annoying, but not the main event. Holders aren't flinching. Conviction isn't wavering. And the whales? Oh, the whales are having a field day. Wallet number 1 just added another 7.5 million KAS today. Let that accumulation sink in. Wallet number 10, up another 1.1 million KS. These aren't small fish playing with lunch money. These are institutions, early believers, or someone who knows something the rest of us are still Googling. But wait, there's more. Wallet number 9 received 15 million KAS yesterday, then sent 11 million back to the same wallet. Now before you scream dump incoming, this looks like internal balancing, moving funds around within the same entity. It's like transferring money from your checking to your savings. Boring? Yes. Bearish? Not necessarily. And then there's Gate.io. They just saw a 15 million KAS outflow. For those keeping score at home, that means 15 million coins left the exchange. And coins leaving exchanges typically means one thing: they're going into cold storage. That's not selling pressure. That's hodling with a capital H. So what do the charts actually say? Alright, let's zoom into the 4-hour time frame because, honestly, that's where the action is happening. We've been in a pretty clear downtrend since late October, falling from around 4.7 cents all the way down to last week's low, which was right near 3.6 cents. That 3.6 cent level has been like a brick wall of support, catching the price multiple times, just like a safety net under a trapeze artist. So, right now, Kas is trading around 3.88 cents, and yeah, buyers are cautiously tiptoeing back in. First resistance, that's sitting right at 4 cents. Price actually got rejected there twice this week already, so bulls really need to punch through it with some conviction. If they do, the next stop is 4.7 cents. That's the breakdown zone from earlier this month. Breaking above that would honestly be the first real sign that the trend is reversing. Until then, we're just bouncing around inside the wreckage. On the flip side, if 3.6 cents breaks, things could get ugly fast. That's the line in the sand. Lose it, and we're probably heading lower. So, my take, that level holds. Why? Because whales are accumulating, sentiment is bullish, and honestly, no one's panic selling except maybe the guy who bought at 4.7 cents and rage quit crypto forever. Now let's talk indicators, because technicals don't lie. They just, sometimes mumble. The RSI on the 4-hour chart is sitting near 40 and starting to curl upward. That tells us selling pressure is cooling off and there's room to run before we hit overbought territory. It's kind of like the market just finished a marathon and is catching its breath before the next sprint. Open interest is sitting around $235 million and, honestly, it hasn't moved much. That's actually bullish in disguise. Why? Because it means traders aren't panicking. No one's rage longing or revenge shorting. The market is calm, collected, and just waiting for direction. Net long and net short positioning are balanced too, which lines up perfectly with this sideways chop we're seeing. The MACD just started turning upward after weeks of red bars. That's early momentum building. It's not a buy signal yet, but it's like seeing storm clouds gather before it rains. Something's brewing, my opinion. We're in that quiet phase right before volatility returns, and when it does, it's going to move fast. According to Ivan Ivanov on X, Kaspa isn't just sitting around waiting for price to recover, they're building. After launching Kasia for decentralized messaging, they just released the test version of K-Social Network, the first decentralized social media platform on Kaspa. Ivan even tagged Elon Musk and X, suggesting they integrate with Kaspa's decentralized backbone. Bold move? Absolutely. Delusional? Maybe. But also exactly the kind of moonshot thinking that makes early adopters rich. And Kaspa Daily reports that the first Kaspa-based web browser just dropped in test mode. Code's already on GitHub for anyone who wants to audit it. This is the kind of ecosystem growth that separates real projects from vaporware. While other coins are tweeting engagement bait, Kaspa is shipping actual products. That matters. So what's my short-term outlook? This week is make or break for KAS. If buyers can push through 4 cents with solid volume, we're looking at a move toward 4.4 cents, possibly 4.7 cents. That's the level bulls need to reclaim to shift sentiment from maybe it's over to okay, we're back in business. Volume is the key here. A breakout on weak volume is just a fake out in disguise. But if the market weakens and we revisit 3.6 cents, things get dicey. Lose that support, and this little bounce evaporates faster than your portfolio during a bear market. We could see a retest of lower levels, and given how unstable the overall crypto market still is, more volatility is practically guaranteed. My take? Kaspa looks like it's forming a bottom after a brutal 2-month slide. The project is solid, the community is active, and development hasn't slowed down. But traders want proof on the charts before they commit capital. And honestly, I don't blame them. We've all been burned by strong fundamentals before. According to Kaspa Daily, holders remain unfazed no matter the market swings. They're treating dips as noise, not signals. And when you look at whale behavior, it's hard to argue. They're not selling, they're accumulating. That's the kind of conviction you usually see right before a major move. Whether that move is up or down, that's what we're about to find out. For now, I'm watching 0.040 like a hawk. Break it, and we're probably heading higher. Fail, and we're back to testing support. Either way, Kaspa is setting up for something big. The question is whether you're positioned for it. Alright fam, that's the full breakdown on Kaspa. Whales are loading up, fundamentals are improving, but the chart is still in recovery mode. If you found this helpful, smash that like button and drop a comment below. Are you bullish on KS or waiting for more confirmation? Let me know. And if you want more deep dives like this, check out my other videos. Subscribe if you haven't already because we're just getting started. I'll catch you in the next one. Stay sharp, stay profitable, and don't bet the rent money. Quick reminder, this is not financial advice. Crypto is risky, volatile, and can absolutely wreck your portfolio if you're not careful. Always do your own research, never invest more than you can afford to lose, and remember that past performance doesn't guarantee future results. Trade smart, stay safe, and I'll see you next time.